The S&P market is likely to go higher. Today is November 4th, and the market did come down to the 6,800 level today. It filled the gap, and that was our level of support, which we potentially thought might be the basis for a continued rally. And so ultimately, we still think that. We still think that the primary probability is that the S&Ps are going to go higher and probably go up into the early part of December and possibly early January before stopping and possibly having some sort of a dip in January of next year. There are several cases here. Since the S&Ps did come down, they ran up into the upper channel, which is a natural place for them to find resistance. And I think they probably will stay in this area between the upper and lower channel until the 13th of November. The upper channel is around 6,950 to 7,000 because it's moving upward. And the lower channel is right at the moment at 6,630. And by the 13th of November, it will be about 6,680. We don't expect it to break below that. So we're looking for a follow through on the upside, potentially until around the 10th of November, and then one more pullback into the 13th. And then if all goes according to plan, it should move up strongly till Thanksgiving and into early December. Potentially December 2nd through 4th might be a high point of meaningful significance where you might want to lighten up your position for a few weeks. Longer term, we're still bullish. We think the market may go up all the way until next April or May, and we're looking for 7,600. If it doesn't happen before the end of the year, it's still likely to happen anyway, and it'll probably happen later in the early part of next year. Okay. By the way, we are giving our next Market Forecast Mastery course starting on Sunday, the 16th of November, in a few weeks. Okay. And if you're interested, there's information below this video. The cycles that we're looking at, we look at about 40 cycles. Of those, about 10 of them have been tracking the market fairly well. And so considering the 10 that have been repeating nicely for some time, 8 of them are bullish and 2 of them are bearish. Okay, we've mentioned the bearish ones just to be completely clear. The 49-week cycle multiplied by 4 and the 49-week cycle multiplied by 6. Both of them made tops at the end of October. They both go down. The 6 times 49 weeks, it goes down until Thanksgiving and then it goes up. The other one goes down further in several months. Okay, so what do you do if you have a number of cycles that are up and some of them are down? The answer is it's called wave mechanics. And if more of them are up and they're highly accurate, then you would tend to include that there's probably going to be a up influence mostly from the 8 and possibly some hesitation or some down push from the 2, but that it will be overtaken by the wind of 8 cycles working together and only 2 fighting. Okay, that's basically how we make a decision. There's always going to be something that's going down. Okay, now ultimately the 261 trading days are interesting. That's 2.618 times 100. It turns out to be a really important cycle, and it's also astrologically the amount of time between the Saturn-Sun conjunction until the next Saturn-Sun conjunction. And it's also interesting, it's the interval most every year between Saturn going retrograde one year and then Saturn going retrograde the next year. And it's interesting how there's a uniformity to that motion. In this case, what we've seen is that this particular cycle is primarily up, and that one cycle ago is basically approaching a high point. 2 cycles ago is working in the same direction. Usually the multiples of 2 are in the same direction. In this case, you can see how next April lines up with a high, low, high, low, high, low, going back a number of years, where a high comes out next April. And last year we had a low at the same point. So it's a very good chance that this market will continue higher based on roughly a 1-year cycle. The Mercury cycle, which we talked about last time, which is the position of Mercury last year compared to this year, is also very accurate. And that's been repeating quite well, including this dip that it just did. And that goes up also until the end of the month, until early December. Then it has a nice little break for a few weeks, and then it goes up again. Okay. The Sun-Rahu cycle, which is the 49-week cycle based upon the conjunction of the Sun with the North Node, that one has been tracking the market pretty well, and that one also goes up until December. Okay. The seasonals we talked about last week, that late October, early November is 75% of the time bullish for a number of months going forward. We talked about it astrologically based upon the low point for the Sun at 10 degrees of Libra and the low point of Venus at 28 degrees of Virgo, both of which happened on the 28th of October this year. So there's quite a bit of wind at the back behind this market, even though we're at all-time highs. We also mentioned this is obviously a bubble. So how do you handle this bubble idea? Well, it's very clear that the fundamentals indicate quite clearly that the market should not be as strong as it is, and yet it is. Many of the technicals, many subscribers, they've said to me, look, you know, the Bollinger Bands on the monthly, on the weekly, on the daily, they're all saying that we're above the upper Bollinger Band. It's extremely risky. You should see a big decline. And yes, in a normal market, we would. But in bubbles, sometimes they continue to get bigger and bigger and bigger, and the normal technicals even don't work correctly. There is one tool, though. Gann had a very good rule, which was if the market is in a bull market or it's in an uptrend, and along the way it has dips. And we had some big dips. One of the big dips was in April of 2025. The market fell from 6,200 to 4,800, okay, 1,400 S&P points. If we go up to 8,000 or higher, okay, and you don't know what to do, and you just don't know you don't want to get out, but you don't know if there's indications that we should get out. One of the rules is as soon as we break down more than 1,400 points, which is a lot, but it's still, if the market is sufficiently high, it could be higher than it is by far right now. Okay, and that's a way to do it. That would be an indication that some larger cycle is turning down and potentially a bear market will start. Could go back up again and then fall further later. But that's a kind of a guideline that once you start making declines that are larger than the biggest decline that happened on the way up, it's a good sign that the market is finished. Okay, and you can begin to figure out an exit. You may not want to get out then. You may want to wait for another bounce before getting out. But it is at least a reasonable technical tool that actually has some validity as to how to exit a bubble without having it go down 70% before you get out, this kind of thing. So the bottom line is, you know, it is a bubble and it is risky to stay in a market that's at all-time highs, yet it could go significantly higher, as we mentioned last time, that 30-year cycle basically saying we could even go up another few years. And that doesn't mean we go up every year. It means 2026 could easily be a down year. The 4-year election cycle, basically, it says that 2026 has a high probability of being a down year. Just that. And that's been remarkably good. Okay. The 60-year cycle, we've said repeatedly, says is making a high in the spring. The 18.6-year cycle, which is not in line with the 60, and you need to include it because it's another slow-moving planet that controls that. That's also up into April or May of next year. Okay, and as I just showed, this 2-year cycle, based upon 261 trading days, it calls for a high next April or May also, and it's been repeating quite closely. If you look back in 6 of those, it's the best fit. And it lines up somewhere in 2018 where the market actually goes up and down a little bit into later in December. It doesn't go down, but it goes sideways into middle December, and then it takes off next year tremendously until April or May in the following year. That's another path that it might take. So we're not 100% sure exactly how it's going to happen, but the odds are extremely good it's going to go higher, not lower. The odds are extremely good we're not near a major top, even though some indicators say we are. And we want you to basically recognize we can be wrong, and it's important for you not to hang on to me or anyone else who's giving advice. You have to make the decision. It's your money.